April was a terrible month for the stock market. The S&P 500 had its worst month since March of 2020, and the NASDAQ had its worst month since the 2008 financial crisis. It was a terrible, terrible month. In this video, I want to talk about two dividend stocks because dividends can be a great way to make a little extra income during these turbulent times, so stick around. Hey guys, welcome back. I'm Richard Allen with TipRanks TV. Thank you so much for joining me for another video. Happy Monday. Hope you guys all had a great weekend. It was a terrible month in the stock market in April. So I want to talk about two real estate investment trusts, also known as REITs. REITs traditionally have fantastic dividend yields. The first company that we're going to talk about has an almost 9% dividend yield, and the second one has a 12% dividend yield, and they both have some fantastic upside potential over the next 12 months. The first company that we're going to talk about is TPG Real Estate Finance Trust, trading under the ticker symbol TRTX. REITs are traditionally dividend champions, in part due to tax regulations that require them to return a high percentage of profits directly to shareholders, and dividends are a logical vehicle for that return. TPG has a reliable dividend history going back to 2017. In that time, the company has not missed a quarterly dividend payment and has even made special dividends at times. Finishing last year, TPG was managing $5.4 billion in real estate portfolio. Of that total, 71% was made up of commercial office space and multifamily dwelling units. The company's business is focused on the eastern and western U.S. markets, which together account for 63% of the portfolio's geography. TPG will be reporting first quarter 2022 financial results this Tuesday, May 3rd, but we can get a good feel for its current situation by looking at Q4 results. The company generated a bottom line in GAAP terms of 51 cents per diluted share, a sum more than adequate to support the dividend payment set at 24 cents per common share, with a 7-cent special dividend added on. The regular payment, annualizing to 96 cents per common share, gives a yield of 8.7%. A five-star analyst from Wells Fargo had this to say about TPG. Proceeds from asset sales and other factors should drive some modest dividend upside going forward. TRTX should also benefit over time as rates rise, particularly as loans originated with high LIBOR floors roll off or get repaid. TRTX shares trade at a discount to the peers who are north of 1x BV, a gap we expect to close over time. And the company has a new CEO who was the head of U.S. commercial real estate debt at Goldman Sachs. All right, so we know that Wells Fargo is bullish on this company, but what do the other analysts on Wall Street think overall? TPG RE Finance, trading under the ticker symbol TRTX, is down slightly today, but is a strong buy based on 4 analyst ratings with an average upside of 33% over the next 12 months. So we've got 8.7% annual dividend yield plus a potential 33% upside over the next 12 months. That would be fantastic for anybody. All right, second company on the list is Pennymac Mortgage. This is another real estate investment trust operating the mortgage investment trust subsector of the business. Rather than making direct investments in real property, Pennymac invests in mortgage-backed securities and direct loans to buyers. While the real estate market was hot last year, Pennymac underperformed. In the fourth quarter of 2021, the last quarter reported, Pennymac showed investment income of $49.5 million, a top line that was down from $196 million in the year-ago quarter. The company registered a net loss of 28 cents per share in the quarter. Despite these lackluster results, Pennymac kept up its dividend. The most recent declaration for 47 cents per common share was paid on April 15th, with an annualized rate of $1.88. The company's share dividend gives a robust yield of 12%, with average dividends from S&P companies right around 2% and the average yield for Treasury bonds right around 3%. This is a very attractive yield of 12% from Pennymac. Eric Hagan of BTIG had this to say about Pennymac. Leveraged mortgage investors face the risk of earnings compression connected to aggressive Fed policy, but beneath the overhang, we can still identify select catalysts which are largely disconnected to the level and direction of interest rates and mortgage spreads. We want to remain long the common stock here. PMT also has preferred stock yielding 12%, with lower spread risk and funding sensitivity as a result of sitting higher in the capital structure. All right, what do the other analysts think overall about Pennymac trading under the ticker symbol PMT? It's a strong buy based on 5 analyst ratings with an average upside of just under 25%. So 12% dividend yield plus a potential 25% on top of that over the next 12 months. That would be absolutely fantastic and would probably beat the S&P and the NASDAQ this year that, again, are down considerably. It's been a terrible 2022 so far for the stock market. Let me know if you're excited about dividends, if you're excited about these REITs. If you have a favorite dividend stock that you want us to talk about here on YouTube or TipRanks TV, please let us know down in the comments and we will certainly talk about it in the future. Thank you so much for joining me for another video. Again, I hope you guys had a fantastic weekend and you're off to a good start in May. Let me know if you are down in the comments. As always, thank you so much. I'll see you in the next one.